Welcome to the Imperium Forex Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to this morning's webinar. The Australian dollar bulls gathered in numbers overnight in the European session and took the challenge towards the resistance of 78.80.85. However, the upside contest appears to have failed at present after printing a high of 78.92 and was rejected. From the rejection, the market still sees the downside as vulnerable, purely for the fact is that we've got the 60-day moving average, which comes in around 78.20 to 29. A break or close under that region would give further confidence to the downside and bring in a target of 77.45.65, which is where I prefer the move, purely for the fact that the technical implications are clearly setting up for that case. Any advances should continue to fail towards that level at 78.80.85, and I still believe that will be a sell zone. Overall, the technical implications for the euro still remains bearish, or on the flip side, bullish for the US dollar story. With a double bottom in place for the US dollar index and also a double top for the euro, the neckline comes in at 122 figure. Now a break beneath there gives us a measured move down towards the target of 118, and which is where I feel the market will eventually end up. We've got a couple of signals still in play. We've got the bearish outside range day. We've got negative indications as well from the technicals. That does support the market will move lower. Now, as the market slowly treads water, it is believed that we will eventually get a further volatile session coming into later today when we have Fed Chairman Jerome Powell, who is set to address Congress later today around 12:30 midnight in Sydney time. Now, Powell is expected to address monetary policy in his first semi-annual economic testimony, though many market participants hope that Powell will pacify an ongoing tug-of-war between bonds and stocks, and therefore the central bank could stick to the script and ensure lawmakers of a continued gradual pace in rate hikes. It is viewed at the moment that there's 3 locked in for this year, but there is some concerns that the 4th could sneak in, with the first seen in March on the meeting on the 21st. For the moment, though, I do expect to see a challenge towards 122.70 and then eventually lower, as I mentioned, where the neckline is at 122 figure 10. For those trading dollar yen, well, the dips are still a way to go in terms of buying as a strategy after the market briefly looked down towards the 106 0550 region. I still view that the market will be a buy from there and eventually take out that topside level of 107.75 and progress on another 100 points towards the region of the high 108. At present, you can see the pound got a little bit spooked yesterday. There was a story in the newspaper in the UK that came from the British newspaper, the Sunday Times, after reporting that the Deputy Governor, Sir David Ramsden, who is the Bank of England, should I say, Deputy Governor, has changed his outlook on rates. He feels that he's more fall into the more hawkish side when he was quoted to say that he sees the case for rate rise somewhat sooner than somewhat later. The pound did take the challenge up towards 140.60 after printing a high of 69 and then rejected from there and now sets up the case for a weaker story with the downside targets around 139.35 to 138.25.35 with the uptrend, as you can see, comes in around 136.80. The gold story still very much holding to a bear case after another failed attempt overnight failed to contain or even sustain the region of 1,340. Now, at the moment, I do expect to see weakness to come back into the market, especially from what the technicals imply, and look towards a case of 1,327 as the first challenge. We are quite close there at the moment. As you can see, the market is looking closely towards that region after the low was 30 this morning. I do believe the market could actually get down towards the 22 to even 14.16 area, but the bullish foundation is still holding. As you can see, the market's gone from 1300 up to 1360, back down to 1300, up to 1360. the pattern shouldn't change. So I'm looking down to 1300 before rallying back to 1360. Silver still holding very much to this uptrend, which comes in around $16.40 and a base seen at $16.20. If this pattern holds, and as you can see from a technical point, the MACD is actually looking quite supportive for a further bullish case, but still needs to clear the couple of levels of $16.70 and then higher towards $16.90. Rounding off with oil, but I'm still not bullish, and I still feel the market is still poised for a down test. If you look at the weeklies, the market is showing no momentum. So I feel that when you fan this trend line, the market should be capped around $64.50 and looking down towards a region that comes in immediately at $63.40 to $62.45.55. Any advances I still feel will fail towards 64.5. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the day that's ahead.